Good day traders and investors, welcome to our new market update. In this video we're going to discuss 3 great technical opportunities that you can monitor in the following week as they can provide some amazing perspective. Let's get that going. The first thing we're going to discuss is a 4-hour chart on GBPUSD. Some of you may remember that a couple of weeks ago we published a great technical update on the double bottom that the price formed right over here, which produced a huge increase which a lot of you managed to benefit from. Now, in the process of forming those recent movements, the price gave us a very obvious bullish market structure. The most recent major high was formed right over here around 1.2732. Since then the price started falling down over here, and if we zoom it in, as we can see in this region, the price created a very obvious falling wedge chart pattern. This falling wedge aligned with the previous major high point in this bullish market structure and the support range that it was creating. We can notice that over here the price produced a breakout, but after that it ended up retesting the resistance line of this falling wedge chart pattern. Over here those long wicks are showing us some very strong rejection, and depending on how the price continues from this point onward, it may provide some great perspective. In this situation we can go ahead and we can add the Fibonacci retracement levels for this last upswing like this. Now what we can notice is that this initial rejection over here and breakout from the falling wedge happened right in the golden zone of Fibonacci. Over here, however, the price managed to drop down, even close some candles below the 0.618 retracement, and those wicks fell as low as the 0.786. Monitor the price early next week to see how it will continue from here. If the price starts falling down and closes some candles effectively below the 0.786, this may invalidate the pattern. If the price, however, starts indicating a rejection again from this support range and it closes some candles above the support range and above the 0.618 Fibonacci, this can indicate some very good bullish perspective. If you want to get even more certainty, you may want to wait until the price closes above the 0.5 Fibonacci or above this high point it created over here on its initial breakout from the falling wedge. One more thing to add over here, if you jump to a daily chart and you observe the situation that's been happening over here, and if then you include exponential moving averages 20, 50 and 200, you're going to notice a couple of important things. The first one is that right over here, the 3 moving averages aligned in a way which gives a confirmation of a possible general uptrend. You have the price sitting the highest below at the 20, then the 50, then the 200. The second important thing is that on the daily chart, right over here, we're noticing that the price tested the 20-period exponential moving average and showed some rejection before it closed. Now, if we zoom back a bit, we can notice that recently the price has been respecting the 20-period exponential moving average quite a lot. It has produced multiple tests while it was on an uptrend and after that as it was on a downtrend, and most of them are showing us that the 20 is managing to sustain and push the price in the opposite direction. So monitor the development over here very closely. On this chart we are observing a 1-hour time frame for GBPAUD. The price might be forming a very familiar chart pattern. Over here you can notice that we're getting conditions of a potential inverse head and shoulders. Like this, you have your first shoulder, the head over here, and right now the price may be forming its second shoulder. For this chart pattern to produce an entry, what we need is the formation of this second shoulder Now the price has already produced a good enough drop. It may drop a bit lower, but it's not mandatory. What is necessary, however, is somewhere around this region for us to get a reversal, and we need to get a closure above this range over here, which acts as the neckline of this pattern. Now, before we focus on this region, let me show you the bigger picture. If we zoom out, you can notice that over here, this rejection is happening from a very strong support range, which has been formed from all of those low points here, here, and over here. What's even more interesting is that just recently, over here, the price tested this range, even though it dropped significantly below it for a moment. After that, the price produced a huge rejection. And notice, right over here, we got an inverse head and shoulders. You have your first shoulder like this, then you have the head, and then you got your second shoulder right over here. This one had a bit of an incline like this. Couple of extra things to look out for over here, besides the price closing above the neckline, would be the 20 and 50 exponential moving averages. At this very moment, they are indicating a bearish trend, where you can notice that over here the price broke above the 20, tested the 50, and then corrected to the 20 again. If the price starts going up and closes above the neckline, monitor for the 20 and 50 going below the price and producing a cross. If they do that, this would be taken as an extra confluence. Finally, we can add the MACD indicator. Now the MACD already produced a cross right over here, which was a bullish indication, and it aligned with the head of this inverse head and shoulders pattern. To get an extra confluence from it, what we want to see is the MACD line staying above the signal line and both of them crossing above the zero line. If this happens around the same time in which the price potentially closes above the neckline, this can be an extra confirmation of a bullish movement. For our final analysis, we're looking on a 1-hour chart for CHFJPY. The primary focus on this opportunity is that right over here the price has been forming a very obvious symmetrical triangle, and a breakout can happen very soon after the market opens tomorrow. Now, to understand what makes this opportunity even better, we need to go to a 4-hour chart and zoom a bit back. You can notice that over here for a while those blue lines have been indicating for us that the price has been moving in a very obvious bullish market structure. Now, for the first time in over 8 months, this bullish market structure turned to a bearish market structure with this drop that happened right over here in the last week. For those of you that know about market structure, you can understand how this now is a transition to a possible beginning of a general bearish market structure. Now, as the price produced this movement, we can notice that over here it consolidated. Let's go back to the 1-hour chart. And this increase that the price produced over here while forming this symmetrical triangle hit the resistance range which was created from the last major low point while the price was still in this general bullish market structure, and this point was also confirmed over here. So this acts as a very strong resistance. On this setup we can include a few other indicators to give us a better perception of what to look for. First, we are going to include the Fibonacci retracements. We're going to start from over here just before this strong downswing, stretch it to the bottom of it and go to the right side. You can notice that over here, as the price corrected to the upside, this high point experienced rejection as it encountered the 0.5 Fibonacci retracement. Also, if we include exponential moving averages 20, 50 and 200, we can notice that from over here they have been indicating that the price is in a downtrend with their alignment. You have the price the lowest, above it the 20, above it the 50, above it the 200. Now what we can notice is that over here the price temporarily crossed above the 200, couldn't sustain, dropped below it, then it tested it over here, and finally, very interesting, if you zoom in on it, you can notice that right over here the price formed a bearish engulfing. It is important to point, however, that right now it's sitting exactly on the 20 period exponential moving average on the 1 hour time frame. So to wrap it all up, even though a lot of those supporting analysis suggest that the price might be more likely to continue to the downside instead of the upside, in the very short term, the thing that matters the most is the symmetrical triangle itself. We know that by definition a symmetrical triangle is considered to be neutral until it produces a breakout. Now we also know that to use it with its higher reliability, it would be better to trade it if the breakout happens in the direction of the movement that led into this triangle. Because it's a drop that led into this symmetrical triangle, if the price produces a breakout to the downside, then this can be taken as a scenario that provides more certainty. But also, if it produces a good enough breakout to the upside, this can still provide us with a decent increase. Couple of things to look out for in both scenarios. If the price produces a breakout to the downside, the good news is that this would be a candle that would close below the 0.382 Fibonacci. If the price closes to the upside, it would be good for you to wait until it produces a closure above the 0.5 Fibonacci and also above the 50 period exponential moving average. Finally, one extra thing to look out for as an extra confluence, if you add the MACD indicator, you can notice that it produced a bullish cross over here. And even though since that point the price did produce a bit of a higher high, generally it's been consolidating. Now there's a couple of potential things that the MACD indicator can do in the near future, and both of them can be taken as an extra confluence. If the price breaks to the downside, what you want to see on the MACD is a cross between those lines. If the price produces a breakout to the upside, what you want to see is the MACD line staying like that, the MACD being above the signal line, but also you want to see both of them moving above the zero line, which can provide a continuation signal. I hope that you've enjoyed this update, and I hope that you find it helpful. Let me know what you think down in the comments, and also subscribe to our channel if you would like to be notified whenever we publish new analysis and also educational content. You can follow us on our social media profiles, Instagram and TikTok, and also you can join our new free Telegram channel on which we're going to be publishing important analysis and market information. You're going to find the links for all of those down in the description. I'll see you next time.